passive investment opportunities through commercial real estate, and you're looking at the underwriting or the offering memorandum or the investment summary from the sponsor, you want to see if there's cash flow from day one. Like, how is the property doing? Does the property produce enough cash flow to cover the mortgage, to pay for some of the CapEx items? All of the above. It's like, why is that important? Hey everyone, Suzy here from Adventurous Real Estate Investors. Today, I'm going to chat with you about why it's important for cash flow on day one. And what do I mean by that, right? Like, what do you mean by cash flow? So what I want to explain is that when you are looking at passive investment opportunities through commercial real estate, and you're looking at the underwriting or the offering memorandum or the investment summary from the sponsor, you want to see if there's cash flow from day one. Like, how is the property doing? Does the property produce enough cash flow to cover the mortgage, to pay for some of the CapEx items? All of the above, right? But it's like, why is that important? So it's important because of the uncertainty. The uncertainty from the rise in interest rates, the uncertainty from this supply chain extravaganza that is going on right now, just uncertainty from COVID still. I mean, there's a lot that is going on, and because of the threatened state of the economy and the government's intervention with all of the stimulus dollars, a lot has just been happening, right? Like, the interest rates keep climbing, the demand for real estate keeps climbing, and then all of that shows evidence of compressed cap rates in major markets. And so we want to make sure that with all of this uncertainty, and even with the higher prices that investors are paying for real estate, that there are still great wealth building opportunities within these value add strategies, right? Because that is what will make the deal great. You want to buy a deal knowing that there will already be profit. You don't want to, that's when you buy. When you buy, there is a profit already. You don't buy in hopes for a profit. That'll get you in some trouble. Don't do it. And it's so competitive out there right now that once an offer does get accepted, you have to make sure that the underwriting from that operator is really, really conservative so that they can make the projections that they said that they would. I mean, there's always that chance, right? Because a projected pro forma is just like what they hope happen. But when they give themselves that buffer, it is more likely to happen. Yes, anything can happen, right? COVID can happen again. Goodness, I mean, if something happens with the supply chain or inflation goes up even higher, if interest rates go up even higher, a lot can happen in the industry. Like, that's why multifamily is a risk. But you just want to make sure, as I said, that the cash flow is there. So cash flow aligns just like with this objective with the value add strategy. Because when you have that value add strategy, you are putting amenities in place. You're taking that CapEx money and making the community, that apartment community, a better place so that the valuation is higher when it comes to sell, right? And you want that cash flow so that throughout the life of the deal, you have that little trickle that can come as a passive investor, or you know that there necessarily won't be a capital call for more funds because that cash flow will help cover any of the CapEx items that come up or any of the maintenance emergencies that come up so that you aren't put in the position to have to put more money into the deal, right? So what is your risk profile? Like, it's just important to figure that out as a passive investor and like your goals of investing. Because when you passively invest, it's just a great source of diversification. It's a great source of tax benefits and just wealth creation. That's what we're in this for. And so when it comes to the final sale, because that is the primary objective most of the time, either a refi or a sale, some sort of disposition for you to get a lot of your capital back. Like, the cash flow on day one is still offering that upside potential. And that's a great for majority of passive investors, right? To get a little bit of cash flow throughout the life of the deal and to boom, get that big check or bigger check, however you want to word that, when it comes to selling. So again, just to go over, like, cash flow is really, really important throughout the life of the deal, even though it is getting harder to find. So if there does come a day where cash flow is not available, we just all have to think about our risk profile again and what we want as investors. But The cash flow is just important so that you know that you can have the operator has funds throughout the life of the deal, so that majority of the everything can be covered by capex or maintenance emergencies, and that just so that you can get that little trickle. Again, a lot of people don't want or need that cash flow right away. A lot of people are just in it to get that appreciation play at the end. Everyone is different, and that's totally okay. But Michael and I do strategically look for those value add opportunities so that we can bring cash flow to our investors throughout the life of the deal. So I hope you enjoyed this video. If you did, please smash the like button below and ring that bell so that you can get notified when I do another video. I hope you have a great day. Until next time, explore more. Adventure awaits. Woo!